Hello and good morning, good afternoon, good evening, wherever you join us from around the globe. Thanks for everyone here in Europe spending your lunch break with us today. A very warm welcome from everyone here at the EEX to this live event, where together with my colleague Tim Greenwood, we would like to give you an update on how our power derivatives markets have developed over the past 4 months as we've started into the year 2024. A couple of housekeeping rules before we start the session. So for the next 60 minutes, we will give you an update on how the markets have evolved. We will give a bit of focus on our Nordic markets and present new products. But before we do that, I would like to let you know that this session will be recorded. So with joining the event here today, you give your consent that you are joining a recorded session. And if you have any questions, we are more than happy to answer these at the end of the live event. You can post your questions at any time in the Q&A section that you see on your screen. Without further ado, let's take again a quick look at the agenda. Tim Greenwood will open the session by giving an update on the market developments over the past couple of weeks and months, and then I'll take over and give you an update on our Nordic Power initiatives and take you through our upcoming product initiatives. And with that, I'm more than happy to give over to Tim. Tim, your show.
So thank you very much, Steffen. Hello, everybody. I would normally say it's nice to see you, but I can't. So wherever you are in the world, thanks for tuning in. And yeah, as we said, we would like to give an update on what's been going on in the markets and actually what we're planning to do at the end in the upcoming product section. So let's kick off with the current markets. On the power side, the power markets, we can generally see 3 main areas of development at the moment. Again, first of these would be the continued trend towards clearing. That's not something new. That's something we've mentioned a few times in the other seminars since we had the recent crisis and the gas crisis. We've seen that increasing, and now a lot of our markets, power markets, and I'll show you some statistics in a second, are generally covering more or less, I'd say, close to most of the market, the trading markets. So for a number of those, we have at least over 50% coverage on the clear markets. Now, what that also means is that is having an effect on the second area here, is that these markets are opening up to new participants and new ways of trading. We'll see in a little bit that we're having a lot of financial companies coming into the markets, algo-driven companies in the more liquid of the power markets. That's obviously having quite a big change in how the markets are trading in the levels of liquidity and the status of trades and orders. We'll have a look at that in a moment. But what we also notice is that is having an effect on the less liquid power markets as well. So you could say we have a couple of the power markets which have a lead in terms of the liquidity development, and that liquidity is filtering into the other markets. So generally, that's quite good news for the European power markets. And the third main development is obviously there are big changes ongoing with renewables and the investment of renewables and the effect that is having on the trading markets. A lot of the old ways of dealing with renewables, the subsidies, for example, are being phased out, and market mechanisms are being used instead, and that is having a positive effect on our markets. So if we can go to the next slide, we can have a look at this in a little bit more detail. What that means for our markets is that we have moved out of crisis to growth again. And a number of these major markets, they're all up massively compared to the previous couple of years, or in this case, in the statistics, compared to last year. So the big markets, the German, the French, and the Italian markets, they're all up 68, 96, and 86% compared to next year. And we have that trend throughout all of the different markets. It's also good to see a number of the markets which have been hit quite heavily recently. We usually have the trend when things are quite volatile. It's really the liquidity drivers, the main markets which soak up those liquidity. When things come back, it's good to see that liquidity starts to move into these other, we call so-called satellite markets. So a good example of this would be the Hungarian market, which had quite a dip in the last couple of years, but has started to come back again. Two highlights I will show in a little bit is what's going on in Japan. We're seeing good development there, and also that we've managed to hit a record market share in the Dutch market at 89%. So I'd say it's fair to say now that the EEX and the cleared market, so the EEX is the market leader now for Dutch power, which has moved away from another platform I will not mention in too much detail here. So if we can carry on to the next slide, please. As I said, you can see here on the slide that the general market coverage is that the EEX is now covering the lion's share of the liquidity in most of these respective power markets. So in the last few years, we've seen huge growth in the coverage of clearing. That took up a few years ago, and the increase was quite substantial, and also of our market share in that. If you want to know how we're calculating our market share, we look at the volume traded on the EEX compared to other exchanges and compared to the reports that brokers issue over Libra on a monthly basis. So there's some quite substantial changes in the liquidity there. And as I said, that is assisting newer participants and algo trading participants to move over to trade. They generally look for the liquidity on the order books as well, and that is having a positive effect on the development of the order books compared to OTC clearing. If we can carry on, please. So here I'm just briefly showing the distribution of where the trading is at the moment. It's no surprise that the German market is the biggest, and the French and the Italian markets are in the second and third place for us. But the outlier here you can see is on the graph or the table on the right-hand side is the Dutch market as well. That has, as I've mentioned just previously, quite substantial growth recently towards the cleared market, towards the EEX, and that's starting to develop into a quite prominent hub again. I suppose quite a few of you will remember the Dutch market from the past. Hasn't had the best, let's say, 10 years. It was quite prominent in the past, so it's good to see that redeveloping again. And a lot of the distribution is the volume is spread now between a number of different maturities. So we have everything out from 10 years out up to day ahead products. The graph doesn't show the reality somewhat too well because the bigger contracts, so the years and the quarters, are quite dominant in terms of the number of megawatt hours or terawatt hours which are traded. Sometimes I don't have that here, unfortunately, but it's perhaps a bit better to have a look at the number of trades which are actually occurring and not necessarily the volume behind that. So you will see quite substantial activity in the days and the weeks that we have the short term, whereas in terms of the actual overall volume, it's quite minimal compared to the dominance of the CAL and the quarter market. So we're seeing a very, very good distribution in the curve of where the actual trading occurs. The re-emergence of the non-German hubs in their development, which is very good, and a healthy, let's say, split between what we are now clearing to what we are trading on the exchange. You can see the split in here. The OTC up to the first quarter of this year was 2.4 terawatt 2,400 compared to 1.6 here. What that generally means is that the more liquid the power market, the higher the percentage of the trading on the respective order book. So the German and the French markets have the strongest order books in terms of the split between exchange and OTC, followed by the Italian and so on. And that's something the EEX tries to focus on and works well of working together with the OTC market, the broking community, for establishing the new markets, building up the OTC market, and then building up the order books. And that allows new participants to come in to both trade the order books and the OTC, and everybody profits from that. If you can carry on to the next slide, please. Here I'm just briefly showing the volatility of what we've seen in the markets. It's quite a rough ride, if you like. We have periods where the volatility is quite high and dips a little bit. Towards the end of last year, we had a relatively calm phase. I think everybody enjoyed that calm phase compared to the craziness we had in the start of last year and the year before. But now the volatility has increased somewhat a little bit. And that's giving good trading opportunities to the market, and is that, I would say, now quite a stable level of trading in the market. We can carry on, please. One of the other trends we're also noticing in the development is the increasing importance of spread trading. Now, the spread trading for the EEX means that we have a guaranteed spread, and our spread order books interact with our outright order books to allow participants to actually trade a guaranteed spread. That means you're guaranteed to be executed on both legs, whereas in activities in the spread order book would filter through to the individual outright order books through implied orders as well, which bring further liquidity to the less liquid markets. And that's a trend where we've been pushing for that for a number of years. The initial take up of the spread trading was relatively slow still, but last year and especially this year, that has taken up quite a lot, and not just for the power markets, for the gas markets as well. We're seeing really good development there, and the moving of the liquidity into these other spread markets. It is generally the German market which is dominant for the spread, so Germany against the neighbouring countries, but we also have some activity in, for example, the French-Italian spread as well. And this is one of the core areas we will be focusing on in the next couple of years as well, because we see that as a good route to the market to develop what we're doing in Central and Eastern Europe and also in the Nordic regions. So if we move away from the spreads to another kind of spread of the order book spreads, we spent the last year pushing for a lot of changes in the spreads we're able to offer in the order books. What that meant is that we moved to a more competitive scenario for encouraging market makers to quote on these respective order books. You might have seen some of the announcements we've made, is that we've moved to a tender-based process to encourage or to find market makers. We have a bit more competition amongst the market makers for the quality of the servicing and their offering. And we've noticed this has had a very good effect on the actual spreads of the main markets, and it's something we are now continuing for the smaller markets and for the less liquid markets in terms of the order book development. So as an example, if we take a look at the graph, you can see on the right-hand side, we've marked with a red line when we started our new market making concept. The view graph or the zoom graph, which you can see in the middle, shows the development of the respective bid, best bid and ask spreads within that time. So we're generally happy with that development. We keep a close eye on particular maturities where we feel we're not competitive enough, or the spreads are not good enough, and we retender them to the market. And so far we've been happy with that process, and that's having a good effect on the liquidity of the respective order books. So away from the spreads, I mentioned before that this change in the liquidity is making the market interesting for newer participants. One area where that is definitely the case is the introduction of algo trading in the derivatives market segment. Now, this comes from companies which are dedicated algo traders. They started to trade our markets. They are companies which are using algos for other markets. They'll generally have traded oil or gas in the past and are discovering power, and the liquidity is okay for them to do so. But we also have a trend amongst established market participants to start to use algos. There might be a algo introduced, like with a member that is next to the traditional traders, and that is a trend that's continuing. We could perhaps say it's the digitalization of the trading markets here. And this graph you can see here is just shows you the effect that is having on the market. Here you see T7, which is our derivatives market platform, and you can see the difference in the share of the orders which are coming over algo to the ones that are human, so the ones that have a trader which is clicking. Again, that does not relate where the actual volume, the actual trades are coming from. This is the messaging. We generally see a lot more orders which are occurring per number of trades, but you can see that the level of orders which are coming through the algos has hit now about 92%. And that change has been quite substantial and quite quick towards the end of 2022 to the start of 2023. We've seen that change as well. In our terminology, when we talk about messaging, we're talking about the number of orders and trades. Here you can see the number of just the number of orders which are occurring. But this also has I would say, if I'm being honest, a bit of a negative side on the market as well, in that there are big changes, and so it's our job that we have to accompany the big changes. It also causes a few issues to sort out in terms of the development. And to facilitate that, we established a so-called Algo Working Committee in 2023, where we meet digitally about 2 to 3, perhaps 3 times per year with our members to talk about the development of what's going on, the legal aspects, the regulatory aspects and changes, to facilitate that change in the way trading occurs from through the introduction of algos, that our traders and members feel comfortable in the introduction of these changes which are ongoing on the market. Okay, let's carry on quickly. 2 very slight things I just want to mention on particular markets. On the French market, especially, we're seeing the end of the AREN off-market mechanism. What that means is, for those who don't know too well, the introduction of nuclear power to the market has been regulated in the past at a fixed price. That means that our market has been more attractive if you're able to purchase below this particular price. And this mechanism is changing from 2026 onwards, where we're expecting the markets to be used, the wholesale markets, so the EEX markets, to be used more for the facilitation of bringing this nuclear power to the market on the French market. What that generally means for us is that we're expecting more use of the actual market and further liquidity on the French market. And if we move to the Italian market, there've been quite a few discussions on that market recently regarding the underlying index that the EEX uses to settle its Italian futures. The underlying index we use is called the PUN, which is an average of all the different zones in Italy. So we have an Italian future which is using one price, this PUN price, and there've been a couple of changes in the market on the day-ahead market, where on the day-ahead market the zones will be used for the purchasing and the selling of the power in the future from, I think it's 2025 onwards. And we're keeping a closer eye on that to see how that possibly affects our derivatives markets moving forward. We've received the confirmation that we are obviously in the future still able to settle the PUN. The PUN will be calculated and made available to the market, but it's quite a substantial change to the market in Italy, and that requires from us a bit of closer observation going forward to see if our setup is correct for the long term. So away from the Italian market, just a quick note before I hand over to Steffen again on the Japanese market. Quite a lot of you, if you're trading the European markets, might be a bit far away from the Japanese market, but the EEX made a commitment a number of years ago. So in the Corona time, we launched the trading market, an OTC clearing facility in Japan. The development is going very well there. We're extremely happy with it. We've made the commitment to the market. Steffen will go in a little bit more detail at the end of what our future plans are. But at the end of this month, we're hosting also an event in Japan where quite a few hundred people will turn up. I'd say the market is hot for the European companies, for international companies, but also for Japanese companies moving forward. So we're seeing good volume developments, and we're also seeing a large increase in the number of companies which are active in that market. At the minute, the split is more 50-50 between internationals and Japanese companies, and we expect that trend to continue in the next few years, which is also facilitated by respective product changes, which we'll let you know about in a second. Okay, so if we carry on to the next slide, just briefly before we pass on to Steffen. I mentioned again as the last, let's say, focus market here, that we see the liquidity returning to the central and southeastern European markets. We're happy with that, that they are back to their pre-crisis levels. I think Hungary had a record in January of 83 companies trading again, which is very, very good. And it's our intention to facilitate that and to facilitate the spreads to those markets to further push the liquidity. So thanks for listening, and I'll pass on to Steffen again, who's going to briefly talk about what's going on in Nordic Power. So Steffen, back over to you.
Thank you, Tim. Thank you, Tim, indeed. And a quick reminder for the audience here, if you have any questions, feel free to post these questions in the Q&A section that you can see on your screen, and Tim and I will answer any questions you may have at the end of this live event. For now, let's carry on with an update on EEX's Nordic initiative. And before we look into the evolution of our zonal futures, let me give a quick update as well on the deal between EEX and NASDAQ that was announced last year, June. As you know, the deal is still under review by the European Commission, and EEX and NASDAQ are working constructively with the authorities in order to obtain clearance. Other than that, there's nothing to be reported on this transaction. So we leave it here and can focus on the Nordic initiative, which is EEX's zonal futures. We've launched these contracts about 6-7 weeks ago, so 25th of March. And for the ones who haven't followed that launch, just a quick reflection on what we did. The Nordic system price that has been listed on EEX since 2015 remains listed, and we have actually extended the offering in Nordic system price futures by adding contracts on the longer end of the curve, so you can now hedge up to 10 years in system price futures. And on top of that, and that's actually the bigger part of the initiative, we've launched zonal futures. So for every bidding zone in the Nordic market, we have launched outright futures, just as we have on the continental markets here in Europe. In addition, we have launched a spread functionality that connects system price futures and zonal futures. And by doing so, this location spread basically gives you the economic equivalence of an EPAD contract that many market participants are or have used over the past 2 decades in the Nordic market. So with system price futures being in place and actually being extended up to 10 years, the addition of zonal futures and making spreads available in between system price and zones, in between the zones, and in between Nordic zones and continental markets, we give market participants choice how and where to best hedge your exposure. We have set the link here for more information that is published on our website. But as always, if you have any questions how to get access to these products, feel free to reach out to Tim or myself or anyone within the EEX sales organization. If we go to the next slide, I'm happy to report that we have seen volume and quite decent activity in these new contracts over the past couple of weeks, both via the central limit order book of EEX as well as trade registration. So that is transactions that have been arranged, for example, by brokers and then registered with the exchange for subsequent clearing. What we're seeing is, I mean, that's no surprise in these early stages of the market, that also in the order book, the spreads are relatively wide at some times of the day. So the market is really trying to find the equilibrium and the price level for these zones. But what is very encouraging, already after 6 weeks, we've seen about 30 companies that have been active in the zonal futures. And we're having a number of market participants that are in the onboarding or close to ready status as we have that live event here today. So all in all, I would say a very decent start, and we look forward for even more activity over summer and as we go into Q3. If we carry on, I would also like to give you an update on a slight clarification that we have made on the 1st of May with regards to the underlying, based on feedback that we have received from the market. As you know, these zonal futures, so the outright futures for all the 12 bidding zones in the Nordic market, they are based on the day-ahead auction prices of EPEX spot for the respective market area. Market participants have kindly asked for a even more specific clarification of that underlying to be prepared for any potential bidding zone reconfiguration that may or may not happen in the future years to come. So therefore, we are saying that the Nordic zonal futures, and let me take the example of Denmark 1, is not only based on the day-ahead auction price for the DK1 area at EEX spot, it's even more specifically referenced to the delivery point, which is a voltage station close to Aarhus. You can see it here, and the same applies for all the 12 market areas. So again, future is referenced to the day-ahead market result of the respective zone, but even more specifically to a specific point within the zone to be prepared for any kind of bidding zone reconfiguration. If we carry on, there is also an important element of these zonal futures that we've launched, which a lot of market participants have already identified over the past couple of weeks, but also analysts and, well, here in this case, it's a TSO, Svenska Kraftnät, have highlighted. When you trade a zonal future, it gives you one position to fully hedge your exposure in a specific bidding zone. In the past, you would have typically traded a so-called combo trade, which is a system price future and an EPAT, in order to have a full hedge in a respective bidding zone. Now, when you have two trades, you also have to post two collateral requirements to cover these two positions. With a zonal future on EEX, you will have the economic equivalent, so you will be hedged the same as if you would trade system and EPAT, but you would only have one position. And this one position will result in the single margin requirement. Now, if you're active in different zones, for example, you're long in SE2 and short in SE3, like in the example here also from Svenska Kraftnät, you would only trade two contracts, buying SE2, selling SE3, instead of going through a couple of transactions in system price and EPAT contracts. And that brings down margin requirements substantially. So number one margin requirement for one position, and on top, ECC is granting inter-commodity credits, so margin offsets, in order to reduce the overall margin requirement even more. If you are interested how that system works in detail, feel free to reach out to us. Or when you want to get more information about the kind of differences with regards to margin requirements, Svenska Kraftnät has published a report just a couple of weeks ago, which gives more details about that. If we go to the next slide. It's a very colorful slide, and I will not go through all of these details here, but it again shows the level of offsets that the clearinghouse ECC grants for contracts that are well correlated to each other. What you can see here is the more dark red, the higher the correlation and the higher the credit that is granted in order to offset positions that are highly correlated. So for example, if you are looking at SE3 and Finland, or if you're looking at DK2, DK1, but also other examples here, the darker the color, the higher the margin credits that are granted because of the correlation between the different market areas. What is important is we're not only granting margin credit based on correlations between different zones, we're also granting margin credits across different commodities, for example, power and gas, or different regions, Nordic region and the continent, or different periods, for example, quarters and calendar years, or months against month. Yeah. So what you can really see is that because of these kind of inter-commodity spread margining, your overall margin requirement will be reduced in relation to spending 100% margin on every single position. Now, so far, an update on the Nordic Zonal Futures initiative that we've launched at the end of March. Now it's time to really take an outlook on what's ahead of us for the rest of the year with regards to new products. Tim mentioned it already, that we have an ambitious plan with regards to new products in Japan, as the market is developing really nicely, and so are also the requirements coming from the market with regards to additional products. But let's go through it one by one. On the left-hand side, you can see what is behind us. So that's a look into the mirror. Let's focus on the right-hand side here on what's ahead of us for the second half of this year. EEX is already in touch with market participants in Ireland for actually a couple of years. And ideally, we would have launched this market years ago before, this series of crises have hit us. Now it's really time to, deliver on our commitment that we have given last year. I mean, we had a first event, a very successful event, more than 100 participants in Dublin. So we plan to launch Irish futures settled against the, as you know, day-ahead auction provided by SEMO-PX in the Irish market. We plan to launch these in Q4, so towards the end of the year. Standard cash settled product, so everyone who is familiar with the setup in the rest of Europe will easily be familiar with the setup for Irish futures at EEX. We will also, and I mentioned that, focus a lot on Japan, where the market has found a way and a balance how to hedge longer term exposure. For the ones who are not familiar with that, I mean, we've launched calendar year futures and we've launched seasonal futures to accompany the requests from international participants and domestic players in Japan. The consensus is now that the market prefers to trade in fiscal year, and the Japanese fiscal year goes from the 1st of April to the 30th of March. In order to make that hedging of fiscal year contracts easier, we will launch these contracts also towards the end of the year. Same is true for Japan Power options. Options business in Japan is more significant, way more significant than we see here in the European power options markets. So therefore, these contracts are already traded OTC bilateral, and obviously we as a market operator would like to enable the clearing of these power options also here on the EEX platform. An interesting innovation that we will launch in Q4 are the Spanish so-called Mon-Sun Peak futures, not monsoon peak futures, but Mon-Sun Peak futures. What's behind that? Today, and for the past 15 to 20 years, there were basically two sorts of profiles and contracts available for trading in the market. One was base, 24/7, and one was peak, which was typically defined as Monday to Friday during normal business hours, 8 to 8. That is more reflecting the demand side of the electricity markets, where Monday to Friday was typically business days and business hours. With the ever-increasing shift of renewables, the market needs tools in order to reflect the generation side. And generation is obviously not stopping on a Friday evening, particularly when it comes to renewables like solar. So Spanish market participants have brought forward the request to have hedging tools that allows them to hedge their solar profiles. And this is what we will address with these peak futures that will cover the period Monday to Sunday, and then 8 in the morning to 8 in the evening. We will launch these contracts for the full curve, so dailies up to calendar years. Now, this theme of more renewables and more requirements to hedge renewable exposure is also a driver for the extension of maturities. Here we have the French and the Dutch market on our agenda, where we will add contracts in order to hedge up to 10 years in advance. By the way, that is a topic that has seen increasing liquidity over the past couple of weeks. If you look at the long-term hedges, so up to 10 years out in Spain, in Italy, this is something that is growing more and more, and we would like to enable this as well in the French and the Dutch market. Same is true for Japan, same reason, more renewables and market participants require more instruments to hedge their exposure. Same driver, also short-term volatility caused by more renewables is the reason to increase our product range in Greece, where we will launch short-term contracts, so dailies and weeklies, also at the end of the year. So you see, we have quite a comprehensive set of products that we would like to bring, and we look forward to work with you in order to roll them out efficiently before the end of the year. Now, there's a warm invitation to the audience as well to approach us here on the EEX side if you have any particular wishes or demands with regards to new markets or new products for next year. As you know, I mean, you can always approach us on a bilateral basis or through our typical committees, be it the Exchange Council, working groups, working committees. We are here to, well, answer your requests with regards to new products. And that already concludes our little ride across the EEX power markets, and we look forward to receiving your questions. Let me conclude with one statement, maybe. I mean, now it's the end of, or the mid of May, yeah. So it's also the beginning of the EEX event season, and together with the entire team, we look forward to meeting many of you in person at one of our events in the Nordic region. We will have events in Stockholm and in Helsinki, and later this year also in Copenhagen. We will have an event in Tokyo, as Tim mentioned, and we will have many other events across Europe. So we look forward to seeing you. Thank you so much for joining in today. And now we're open to your questions. There's the first question coming in. In the second slide of the presentation, we can notice that power options are basically zero, and in the new products, your options just for Japanese markets. Will you also offer power options for the European market? What are your overall opinion on the options market? It's a very good question, and let me answer that twofold. Number one, we have an offering for the European power options market, which, as you rightly point out, at the moment is not showing significant volume. We have the clear ambition to bring liquidity back to the European options market, and there are various initiatives going on in order to revive that part of the business. We have had a couple of initiatives last year. We will continue to have a couple of initiatives on the European options market this year, and we will announce that in the course of the next couple of months. But with regards to the Japanese options market, that is something that is really new and an addition to our existing portfolio based on the demand that we get from clients in the region. What we will do there, maybe also some color to that, we will basically copy the existing setup from our European options market to the Japanese options market in order to give people the opportunity to hedge that exposure also with the EEX. Tim, you want to add something to that?
No, not much to add to that. You've given a good overview. As I said, the options market is generally can be treated as a mix of the different products in Europe: the power, the gas, the CO2 options, and freight options we have as well. And it's an important area that the market needs to focus on to bring it back and bring the liquidity back, and we're committed to doing so, as you said. So, okay, if we don't have any more questions coming in, then we can. Oh, we have a question, a late one, you said. Yeah, I can see it, so I'll have a look on this. Yeah. Is it already planned to introduce Monday to Sunday, so months and peaks for solar in other markets, in Italy, for example? Would you like to take that one, Steffen, or shall I cover?
I can take it. It's a very good question indeed. Yeah, and clearly, I mean, we as a market operator are here to deliver on your needs and your requests. Yeah, so clearly, the Spanish market was where the demand was highest, and if we see the demand for that also in other countries and in other markets, we are more than happy to deliver that as well. Not necessarily before the end of this year, but then obviously, I mean, that refers to my invitation earlier. We have a pipeline and a stack of products that we would like to bring to the markets, and then we can always add that for next year in order to deliver on your needs. Feel free to reach out to anyone here, be it myself, Tim, or sales at EEX Business Development, in order to bring forward product requests that you have. With that, let me conclude this session. Thank you so much. Also, if you have feedback, please let us know, and we'll do this kind of regular market update from now onwards, once per quarter, once per half a year. Let us know whatever your requirements for information is, and also follow our LinkedIn channel on EEX in order to get the most up-to-date information coming from the exchange. With that, thank you so much. Enjoy the lunch break, enjoy the afternoon, evening, or have a good start when you're based in the US. Yeah, thank you so much. See you soon.
Thank you. Bye-bye, everybody.